Hello and welcome to the Repeating podcast once again. My name is Ayush, and we have Laksh and Sagar on the podcast today. Say hi, guys.
Hello, guys.
We're recording on the Christmas Eve weekend because we have nothing better to do. So we have sat down and discussed what kind of portfolio someone would make for 2024.
ऐसा ताना सुनने का रहेगा, I can go. I have.
You have plans.
For a change.
Hey,
In fact, he's the only one who has plans. He's the only one who has plans usually.
Yeah.
Yeah, but speaking of plans, you have to plan out your portfolio also for the next year. And that involves taking a lot of asset classes into consideration, what what will work, what won't work, at least in terms of a mild projection into the future, and what kind of weightages you're going to assume to those asset classes. So we're going to break down a couple of these asset classes from equity to debt to gold to real estate, and I think we're going to end with what international equities, and then we're going to see how much we would allocate to our portfolio in 2024. And if you
Gambling.
agree, then comment, say good job or whatever. Let's
We
get
should end
started.
with gambling, actually.
And
Let's-
remember that this is not investment advice,
Yes.
and this
Oh,
is
yeah.
just insight into what
Yeah.
we are thinking,
Yeah.
and that we may implement or not implement or whatever. So the rest is just entertainment/education. Thank you
Yeah.
for watching.
We are the Vidya Balan of the finance world.
What?
Arey, that entertainment.
Oh, I thought.
No, bro.
Ayush, you just put yourself on the internet doing Mere Holna on your
That's okay,
chest.
bro. It's a great song.
Gay.
But let's get back to the topic.
Yeah. So 2023 has been a great year if you've been
Yeah.
invested in equities. Um, like April onwards, all the way till December, there has been a very consistent, nice rally with stocks, at least the indices moving up about 25-30%, the large caps. And if you're invested in mid caps and small caps, then the even bigger party with like a good 50% return made just in the 9 months of 2023. And of course, this comes after a back of 1.5 years of tough market conditions where from the end of 2021, October 2021 throughout 2022 and till 3 months of 2023, the markets had a little bit of a choppy and volatile phase. Inflation going out of control, the world seeing the highest and fastest rate hikes ever, equity markets being under constant anxiety and not performing that well, extreme volatility. So,
Yeah.
if you entered 2023 with skepticism and didn't take exposure to equities, you would have lost out on a lot. But it was obviously hard to guess that equities would do so well in 2023. So while we are experts in equities and stocks, every portfolio at an individual level should have a mix of asset classes to be exposed to multiple asset classes and diversify risk and also make the most out of returns. So if you had a diversified portfolio which is dependent on your risk profile and stuff like that, you would have equity exposure in there anyway. If you're conservative about 20-30%, but if you're aggressive 90%, 100%. And you would have made money on equities irrespective of the proportion, whether if you're conservative, you'd go 20 or 30. So it wouldn't make that big a difference. You would still gain out of the equity rally. So ideal state is for everybody to have like a well-balanced portfolio. But yeah, you can obviously like gain a little more if you're more informed in terms of what the asset classes are going to do. So 2024, what's going to happen? If you had to put a number, let's start with this.
Yeah.
Laksh, if you had to put a number to how much the stock markets or Nifty 50, chalo, Nifty 50, how much will it give in terms of returns in 2024? What's your number?
It's just a number or backing also.
Backing can be in your head. Don't give investment rationale. It's okay. Not everything is. We're not researching right now. We're just blabbering, so it's okay.
Yeah.
I think Nifty would give around what,
One
10 to
number.
12%. 10%? 10 to
Okay.
12%?
Ayush, what's your number? That's very safe to play because historically, over the last 15 years, Nifty's return has been at a 12% CAGR. So by saying 10 to 12, you are playing absolutely safe. But ठीक है,
अच्छा
Ayush.
ऐसा ही चाहिए तो फिर बोलो 30%.
Be right also. ऐसा ऐसे ऊपर नहीं मारना.
I think, I mean, are you changing your answer?
No,
No, he's not.
you say your first,
No.
na? Then we'll see.
I think we'll see a similar replication in terms of, maybe not in the terms of how fast it grows, or like as we saw the first 9 months of
नंबर
2023,
देना.
15 to 16,
ध्यान दे रहा है.
15 to 16%.
Okay.
Sagar.
My number is 14%.
No, playing a damn safe, damn safe.
Yeah.
12% बोला तो damn safe. 14%, वाह. 2% अल्फा में क्या कमाया रे?
कमाया
कमाया
क्या?
क्या? But
Yeah.
seriously, please tell me.
We have
2% पे.
कमाया क्या? हाँ, sorry. No, I mean,
Yeah.
it's just backed by. No, my logic just comes from the fact that I see no potential for re-rating from here for the Nifty 50. I see
Upward or
profit
downward?
re-rating ऊपर ही होता है ना,
Re-rating is
de-rating.
ऊपर.
Anyway,
Continue.
I don't see a scope of re-rating. I personally, not as advice, do not see any scope of re-rating for Nifty 50 from here. So
Yeah.
if valuations were expected to remain flat in my assumptions and earnings growth would be about 14%, then that's what I see it translating into in terms of market returns. That's my logic.
Got it.
Do you all want to give your logics or we'll move on?
No, I think we're good.
I think even there's no re-rating going to happen as big as it happened last year. So my answer also the same, no change.
No, last year we saw different pockets getting re-rated for different reasons. I think in 2024 there'll be different reasons for different pockets getting re-rated again. There'll always
Yeah, but
be
that won't drive
something.
overall Nifty valuations higher, right? You're already trading at
Nifty.
a 24 times 1 year forward.
Yeah.
So even if, for example, you were to say that IT will recover, pharma will recover, for example,
Yeah.
there'll be a re-rating there. That's about 15-20% of the index. 15% of the index tops, not in 15, 12 होगा. But anyway, and if there is a de-rating in some of the sectors, वो negate हो जाता है. But I think my also, which comes to like the first sort of part about equities, and I think view also is that in 2023 there was a surprise element. There was a turn from negative to positive. Most money is made when there is a turn from negative to positive, right? When inflation anxiety was there, RBI was increasing rates, and then in 2023 March you came to a point where inflation seemed to be under control. RBI stopped increasing rates, and rate hikes sort of plateaued, and there was status quo for a very long time on that. That is a material change from what was over the last 2 years or 1.5 years before that. So that change resulted in sentiment improving, valuations going up, or getting stretched even more than they were earlier. However, if I have to sort of sit and assess at what kind of surprises will come in 2024, what am I looking at? Probably RBI cutting rates, but that could be towards the end of the year, or even if it is whenever. The Fed has already come out and said that there may be a rate cut in 2024, and if that happens anyway, RBI will follow suit, or even do it before the Fed does. But in any case, that is already factored into the market. Next is probably government stability and fiscal policy being stable. But that also is already factored in, I feel, because after the state elections, you saw a pop in the markets.
Yeah.
And the kind of consensus that is built in terms of the election outcome, I don't think it will be a surprise कि अरे the government is continuing. I think it'll be हाँ ठीक है पता था. What's the big deal?
But you
I
don't
think
think that will get a rally up, or no? You think that rally is enough?
already factored
A
in.
three
Na? People
shape.
are already
Yeah,
investing for the long term. People are already factoring in
yeah,
key long term. See, look at HAL or Mazda, for example, right? Just as an
Yeah.
example to sort of highlight this. You're sitting on massive order books. Those order books have come because of policy orientation. You are, or even infra for that matter. You will expect that this continues, this pace of growth, etc. And the re-rating has happened. Numbers में earnings factor in हो गया है. Um, what if the government does not change? What more will happen to the sector?
Correct.
Already order आ गया है, sentiment improve हो गया है, people are factoring in higher numbers, etc. I think it's already in the numbers. I mean, in the valuations.
yeah.
So from a surprise element, there is nothing. You're already trading at peak valuations, and hence I think the onus of equity performance will fall on to, according to me, two things. Number one, uh, luck shooting, batada vada. Number one,
Yeah, that's the one.
number one, corporate earnings, which
Yeah.
14% doable. And number two, I think would also be some amount of re-rating caused by interest rates falling, maybe. But I think that is already factored in. At 24 times 1 year forward, you're already factoring in that interest rate गिरेगा or whatever. I think interest rate गिरने से इतना material फर्क नहीं पड़ना चाहिए in terms of valuations. You're already at peak valuations, not peak valuations, but high valuations. Let's call it that. So,
But you see, behaviorally, that making more of a difference. Like the
sorry,
rate hike, although we know it's going to come, and it has been factored in as of now. Do you think that
continue.
when the time comes and when the event occurs of the actual rate hike, the euphoria of it all will
But
possibly
hike किधर से?
cut only? Sorry, sorry. Huh. Do you think
No,
the good
no,
news of it
same
all?
thing with the
Hmm.
BJP government thing, na. If BJP comes, is there a reason to celebrate? Everybody will be like, "Haan, we to kind of expected this only."
Yeah, correct.
So why
So
would the
you think
markets
it'll be
be
the same? Okay.
sort of? Except
Okay.
theoretically, this is what happens, right? Theoretically, your DCFs may your discount rate reduces because the discount
Hmm.
rate reduces, your valuation increases. तो वो थोड़ा बहुत factor in होगा, but that's about it.
Makes sense. So then, if you were to say, okay, if you have this kind of sort of, it's not negative, but it's not positive either. You're not euphoric about
Neutral.
the possibility of equities in the coming year.
No, no, no.
At
That's
least
what I'm
not from
saying.
a massive re-rating.
From an
Yeah.
India story
Yeah.
perspective, you are on the structural growth story, India demographics, India, uh, whatever, har ghar, whatever, everything, all that said and done, right? So,
Yeah.
Bharat, Atmanirbhar, and blah blah blah, apna vikas, sabka vikas. Sab mein, all I'm saying is it's a good 5-10 year story. It's a good 5-10 year bull market. In that, all I'm saying is that if last year you saw 25% appreciation in stock prices or the index level, this year you might not see 25, you might see 14. That's all I'm saying.
Okay.
Um,
Got it.
so positive on equities for sure. Just realistic in terms of quantum of appreciation, uh,
Got it.
and not expecting a blockbuster year like last year. Primarily because of the lack of uh, surprises.
Yeah.
Even if India's
Huh.
GDP, for example, had to accelerate, right? What we're seeing here is that the world economy will also grow faster compared to last year, right? So the
Yeah.
relative outperformance of India versus world will probably remain constant.
Mhm.
So then the
Correct.
valuation also premium has to maybe theoretically remain constant. What's the big deal? So India was the preferred destination because relatively it was fastest. It will continue remaining preferred
Right.
destination because it is still relatively fastest. So
Got it.
yeah, sure.
Yeah. I mean, as you made, it makes sense. No surprises.
Yeah, no
Yeah.
surprises.
Right. You're right. And what about, okay, that's Indian equities. What do you think about venturing into international equities? What does that situation look like?
See, internationally also the last 9 months have been good only in terms of equities, right? I think the rally has been pretty well coordinated across the globe. Uh,
Yeah.
Even the Nasdaq has moved up 30% or more, maybe in the same amount of time. There as well, you are at a place where the Fed has outrightly all said that abhi rate cut ka possibility hai 2024 mein inflation is under control, much better than last year.
Correct.
Finally, the job market is slowing down, and There the worry was very different, right? There the worry was, hey, because of the rate hikes, you're probably going to tip the economy into a recession because you're pressing the brakes too fast, too hard, um, which didn't happen. So that soft landing aspect is the scenario you're seeing. Inflation is getting under control, and growth is also not being hampered excessively. So coming out of it is also not going to be that big an issue. So I think the markets have already factored that in. They're doing well. So I think I would expect a similar scenario for the Western markets, where the amount of appreciation you see in 2024 may not be equivalent in terms of quantum compared to 2023. However, that story could be different for a market like China, um, where it's still recovering. Like, I know we've been talking about China for a long time now, but nothing's happened there
Yeah.
yet. So people would have probably lost money on Chinese equities if they invested last year. But China's at the same place, right? You've got a place where valuations are extremely low. It's a troubled economy at this point in time. They took way too long to come out of COVID and
Okay.
related issues because of their lockdown policies. They have a property crisis in play. They're getting boycotted by the West. Not boycotted, but like people are finding an alternative in India or other countries in terms of exports, imports. Sorry. So,
Yeah.
but there is a domestic play in China which can come through. And any betterment from here is a better scenario for China. So I think I'd still be not with as much conviction as last year because the wait has been long and there's not much movement happening there. But I think there's still a case for China performing well in 2024.
Got it.
So if international equities exposure had to be taken, I'd probably just stick to maybe blue chips or FANG in the US,
Yeah.
and maybe um, a Hang Seng ETF or China offshore ETF, or maybe a Taiwan ETF, Taiwan fund, because semiconductors and
Right.
but there's like geopolitical risk as well. Yeah, like with China, you just can't tell.
You never know. Yeah.
Yeah, I mean, कल जाके ताइवान को उठा लिया तो गया.
Which is always a risk, unfortunately.
Yeah, you can't ever tell. Like like all this discussion, keeping geopolitical risk aside, right? I think
Yeah.
in this day and age, anything can happen on the geopolitical front, and that will completely pivot the view for anybody, at least in a transient manner. What
Yeah.
we've seen is like there is a large impact of wars immediately. People start getting concerned, and there's a morality issue that comes in, etc. But people get over it pretty fast as well. Yeah, they do,
At
right? I
least
mean,
those
some
who aren't, yeah,
fall, but
directly
then they
afflicted.
say, no impact on our money. Keep fighting, guys. So,
Unfortunately, yeah.
yeah, I mean, from a humanitarian angle, bad, but from a monetary angle, that's how it works.
Yeah, true.
Uh,
So you don't see, I mean, that risk being material enough to, let's say, either reduce or completely opt out of international equities altogether, the
See, something like
geopolitical.
Taiwan could affect massively, right? Because Taiwan is
Yeah,
the largest producer of semiconductors in the world.
yeah,
The China-Taiwan risk is very large, primarily because, like, if you take up Taiwan equities and something were to happen on the geopolitical front between China and Taiwan,
yeah,
you are risking an already supply crunched sector uh,
correct.
getting punched even more. And the semiconductor supply issue was causing a downturn in earnings and delayed earnings and valuation derating for a lot of auto stocks, computer stocks, anything that required semiconductors. Um, so that threat is sort of real, right? Um, like in Russia, Ukraine, for example, Ukraine was supplying so much of the world's wheat and sunflower oil and stuff like that that there was an inflation problem after. It
Yeah,
did trigger a lot of supply chain issues and caused the markets to dip for a longer period than an Israel Palestine.
yeah,
So you could see that kind of an impact if like there was something to happen between China and Taiwan. So prolonged dip in the market because of a real supply chain disruption.
got it.
But yeah, so international equities out and out sort of diversify and not concentrate in one geography.
On anyone, yeah, got it. Okay, that's about equities now. Now, naturally, I think the next asset class that people gravitate to, and I think this is what we've discussed earlier also, is debt instruments, which has almost a direct implication of all of the policy initiatives that we've seen going in and out, and things that we've
I am a
already
debt.
factored into.
I'm a debt instrument at this point.
Why?
He is a liability.
Yeah.
No, Laksh has
I'm a,
been a
I'm a
wonderful.
debt instrument to my
Asset.
bank account right now.
Laksh is actually, Laksh was a micro cap and he's become a small cap. He's been a multi-bagger
अरे
for
अरे
us.
अरे अरे अरे.
That's the best compliment an intern could get.
This, please, editor, cut this out and put it on
The real only, real
Instagram.
only.
लक्ष्य इंस्टाग्राम पे सेव करके रखेगा ये रील.
I swear. First reel
The
has
one
been posted
time
on Reddit.
I got a compliment from my boss.
One time क्या? I have praised.
Whenever required. But humbled me down also
Which
whenever
is
required.
minimal, yeah. Yeah.
Yeah. Sorry. So debt.
Debt, yeah.
I think debt is. So it was that is tricky, yaar, like for laymen to these retail investors to understand it.
These are retail.
Sorry, our valued retail investors to understand.
कुछ नहीं भाई तुम लोग equities में ही ध्यान दो.
Yeah, but he's not wrong, right? Like to understand yields, to understand effect of rate changes, to understand what long term, short term
Yeah,
work,
to
how it
understand how
works. It's
price
difficult.
and it's a little
To
difficult.
understand how to cut your bosses. It's difficult.
What?
No, that was
Yeah.
sorry, the other instrument. That when we come to that, I'll talk.
Oh yeah, yeah.
To undercut your bosses.
अरे
Be cheap.
यार.
Mm.
Anyway,
Yeah.
so yeah, so debt. Anyway, so primary. I think Laksh, you want to give a lesson in how interest rates and price of bonds. Basic,
They are
basic.
inversely proportional.
Good. Yeah, go on.
When
Explain how.
interest rate goes up, the current bonds are less attractive, so the price of like their prices fall down because new bonds are issued at a higher interest rate.
And the other way.
And when interest rates are down, the older bonds are more attractive, which results in their prices increasing because they were issued at a higher interest rate.
Yeah. So basically, when interest rates rise,
Oh yeah, no
bond
need to
price-
show my certification. Level 1.
CFA level 1. Let's go.
yeah, when rates rise, bond prices fall. When rates fall, bond prices rise.
You know, I'd seen this meme. You remember Welcome? There's this
The movie. Yeah,
some guy does this,
yeah.
and
Yeah,
someone had made a meme that this is how bond prices work. And उसके बाद that नाना पाटेकर कह ये क्या कर रहे हैं? It's too funny, bro. कैसे
yeah.
उठा
I mean,
दोगे
whatever
ऐसे?
helps someone understand it, like you
Yeah.
retain that information partly from your study, but also from that meme, Loki.
No, the meme was so way later
No, I'm
on
saying like
also.
in general, for someone to gain this
After,
kind of information from
yeah,
social media, it's an easy way for them to understand it.
yeah, that's true.
Yeah.
So yes,
So the last 1.5 years, you saw the highest and fastest rate increase. So which meant although you'll get a higher interest on bonds, the prices will depreciate. Prices will fall. So you're getting coupon which is higher, but capital depreciation happening, which results in difficult conditions for debt investing. However, over the next, now that if you assume that interest rates have peaked or are at near peak, and if people are talking about the Fed, not people are talking about Fed and RBI or whatever are talking about interest rate declines from here or cuts, you'll see bond prices increase. So although you'll get a lower coupon, your price increase will be higher. And without explaining why, when interest rates fall, the prices of longer term bonds rise more and more than the price of shorter term bonds. So at this point in time, you've got yields of about 7% on both liquid as well as long term bonds. Um, and if you do pick up a long term bond at this point in time, um, with the help of our dear friend Aryan Mulchandani from Manifest Wealth, uh, we've got an insight that um, every 1% fall in the interest rate would result in um, an appreciation of how much? I forgot. Appreciation of whatever on the bonds. So if you're getting a 7% yield, about 6-7%. Okay. वही था ना?
Hmm.
So if you
Yeah.
if the rate cuts happen by about 100 bips, you can make about 13 to 14% on long-term bonds because of a 7% yield and the rest coming from capital appreciation. So if you're making 13-14% out of bonds, and the equity markets on average have given you about 12 to 14% returns, you are actually getting equivalent return in a much safer instrument, which should work out very well in terms of debt investing for the next year or two on the longer term maturity bonds. Um, so I think all in all, and somehow, I mean, the markets have already started factoring that in, right? Despite the rate hikes in the beginning of 2023. In 2023, bonds overall, if you look at the bond indices from one-day index to government index to corporate bond index, they've given a return of about 7 to 9% cumulative. So you've already started seeing that factor in at some level, but I think it'll only get accelerated once the rates actually start to fall. So all in all, I think great time for debt investing, of course, given the overvaluation in equities and the relative attractiveness of debt at this point in time. So while we may debate on or think of a lower appreciation in equities compared to last year, there could be a higher appreciation in debt this year compared to last year.
Great. So I think now that we've covered the two main asset classes, there's also the third one that people choose as a fail safe. If nothing goes
FD.
wrong, no, that also comes
I
under
don't.
your debt, although that's not ideal, right?
Uh,
But a third asset class altogether, that's known as like a safe haven spot to park your
Mutual
money and
fund.
hope for the best. No, gold.
Mutual fund. Acha, oh,
Yeah.
Ayush's favorite.
I mean, not my favorite. Now, there's going to be a story that Laksh will recite for obvious reasons after all of this is explained.
That I
But
don't have money.
Yeah, because of Ayush.
yeah.
Damn cheap, huh, bro. I don't think you should cut his salary. Cut 1 lakh from his salary and give him.
Yeah. Anyway,
Damn cheap.
gold. Yes. I think in recent news, we've seen a lot of people speaking about how gold has rallied so much this year. I think it's incurred about a 13% return year to date, almost at par with your equity returns, and way more than, as Laksh mentioned, an FD would give you over the course of a year. Now, India is known to be one of the largest consumers of gold in terms of buying physical gold. But we've also streamlined that into
Show
being.
that, bro. Mallu power, bro. Come on, show it.
I don't have no chain, bro. It's kind of tacky,
Then
but
rings
yeah,
on his hands.
That's true.
Bappy Larry vibe. But yeah, he got it right because it really has done well as an asset class, not just as a place to keep your money in terms of a safe haven, but just as an investable asset
Feel
class.
good
And
also, bro.
sorry,
Feel good also. ऐसा हाथ में सोना अच्छा लगता है.
yeah, but I mean that's not the most ideal way to invest in gold anymore, right? Because while you could sell that off at some point
Hey, we
to,
can do this also. Sorry,
yeah,
Laksh. I love doing this to Laksh. You have to. थोड़ा आ गया ना.
he's taking photo of the podcast on.
नहीं रे, I was.
for the gram.
for the
Okay.
gram.
अरे
Tell
If
that.
you had to, I'll give you a choice, okay? And you have to choose only one out of these. Now,
Hmm.
Laksh is going to invest in gold. This is non-optional. You have to invest in gold, okay? Now,
Hmm.
I'm giving you a choice between would you buy
Physical or
physical gold?
digital?
Number one. Option A, physical gold, okay?
Hmm.
Option B, digital gold. That is on your Gullak and Jar app and all of those, right?
Hmm.
Number three,
Bonds, gold bonds.
sovereign gold bonds.
Hmm.
Number four, gold mutual fund or gold ETF. Which one would you choose? सही
Me
जवाब भी है.
personally,
Yeah, you personally.
Yeah,
yes,
you
as an investor, as a smart investor.
as a smart investor.
If you are a smart
Uh,
investor, you yeah.
We'll figure if you're a
yeah.
smart investor or not smart investor.
I don't know that much about gold. That's the scene. Gold
But if
mutual
just from the
fund.
sound of it, if you had to make an informed or rather uninformed opinion, assume you are a retail
No,
investor, what would you do?
With whatever information you have.
Yeah,
I want to
because
ask
that's
you, in all of these classes, the return should be pretty similar, no?
You're right.
these instruments you mean.
So,
Yeah.
हाँ, मतलब
If
you buy
returns are similar, what
ETF.
will you consider?
Sorry.
If returns are similar, what will you consider as a
I would
defining or
consider
differentiating
bond,
factor?
bond.
No, I'm saying like if returns are similar, you'll consider expenses or you'll try to analyze expenses to see which one is the best option, right?
हाँ, like that, yeah. कि मतलब उसमें अभी
खर्चा
इधर
कितना है?
जीएसटी कितना लगेगा, वैसा ही उसे कि ओवरहेड्स मतलब
Taxation wise
जीएसटी
also.
हाँ,
अगर अभी म्यूचुअल फंड में डालेगा तो एक्सपेंस रेशियो आएगा, डिजिटल गोल्ड में डालेगा तो कन्वीनियंस फी आएगा, जीएसटी आएगा.
कन्वीनियंस फी. अच्छा, डिजिटल गोल्ड के लिए भी ये जीएसटी लगता है
डिजिटल गोल्ड पे लगता है, डीजी गोल्ड पे,
इस
डीजी गोल्ड पे, ओनली डीजी गोल्ड. आई एम
ओके
सेइंग नॉट डिजिटल
ईटीएफ
फॉर्म
पे
ऑफ.
नहीं,
नहीं,
This पे
उस पे पर वो एक्सचेंज को देना पड़ता है ना हम लोग को, जो
वो
भी
तो
है.
ब्रोकरेज पे जीएसटी लगेगा ना, नॉट ऑन द नोशनल वैल्यू ऑफ
हाँ,
द.
yeah, अच्छा, like that. Then either whatever. Then I think exchange only, no? ETF or something. ETF or no, mutual fund will also take. So ETF.
Good. You've chosen the
Like,
second most favorite option, like second of repeating's favorite option.
first
Repeating's
is
favorite option is this only, that
the sovereign
jinx
gold bond.
instrument that we talked of.
Arre, but that yeah, I mean, now when I say the correct option, तभी नहीं.
No,
What? Correct is
no.
SGP.
But you weren't wrong also. Like the ETF is a fairly
It is a good option. I'm just saying
good
that
option.
I would prefer an SGP.
Why is that?
See, ETF is great because there's liquidity, right? You can just sell it off at any point in time, and
That's true.
SGP you have to keep for a certain amount of time for it to be tax free.
Oh,
SGB is also preferred because of other reasons. You get a 5% yield, you get a 5% interest on it, two and a half
2.5%.
percent
Yeah.
semi-annual, because it's a bond. So the government pays you
hmm.
2.5% semi-annual. So 5% yield उधर ही बन गया. Capital appreciation तो हर जगह आने वाला है. Plus tax
Hmm.
free है. So
Hmm.
SGB works out better.
Only thing is liquidity is a problem because you don't find a lot of sellers if you want to sell it in the secondary market. But that's also changing now, I think.
Hmm. If you want to sell, Sagar will buy us.
I have one unit that I just bought from there. So I think just for the benefit of the viewer, these sovereign gold bonds are issued by the RBI. About 2-3 times a year, they sell a certain amount in terms of this SGB, where they give you that 2.5% interest semi-annually, and you also
और
make money on the.
ये निखिल कामत के पॉडकास्ट पे सब लोग खुलेआम खाते हैं, चबा चबा के. तू भी खा सकता है. It's not a
Yeah.
problem.
Be proud of your vada pav, bro.
वो लोग बिलियनर लोग हैं.
It's
तो
okay.
क्या
You really can.
habits
हम
start
लोग
in
Like
एयर,
the.
हम लोग मैं अभी तक एयर भी नहीं बनाए. आगे तो छोड़ो.
versus a million people watching it, there's like a few hundred people watching it, but it's a good
Yeah, yeah,
numbers now.
which is okay. Yeah, yeah.
We've gone from a few tens to a few
To
hundreds
a few
watching
hundreds. That's
us.
great.
So yeah.
Quality over quantity.
No, no, we'd like some quantity also, yeah.
Hey, we've got quality only. I think the quality of
That's
our
what he's saying.
viewers will be better than. Okay, yeah.
Hmm. But
I
we'd
thought he
also
meant.
like some quantity once in a while.
Yeah, आ जाएगा. So all you people watching this need to
Send it to your
like button दबाओ,
friends.
share button दबाओ, comment करो.
But yeah, while Lux talks to his household,
Um,
we will get back to the fact that SGBs are quite an attractive
yeah.
looking option to invest into if you want that little gold exposure. Also, considering that 2024 also might see a similar trend of gold being looked at as that safe haven option, with all that geopolitical tension still occurring, risk still being very prevalent across other asset classes also in some form or the other. And yeah, the second option being the ETF, which is far more liquid. And there's a couple of options on the markets for India. I think we have about 4 or 5 gold ETFs that we can choose from, ranging from the ones that give you return as much as gold appreciates and some that give you more also for some reason. So yeah, gold deserves a spot in our portfolio at least from a safety and returns aspect.
We always keep like we've got these all weather portfolios that always have some allocation to gold.
Yeah,
Primarily, it brings some stability to the portfolio wherever there's volatility. Whenever like throughout 22 23, I think it's given a lot of. It's been accretive to the portfolio.
yeah,
We've got like a minimal exposure to gold, but it's still been helpful
still
in
makes
pushing,
that difference.
at least reducing that standard deviation and adding to returns also.
Cool. So equity, debt, gold ho gaya. Now these are usually the ones people invest into, but there's also stuff like real estate and infrastructure that people invest into using other instruments that aren't as famous maybe.
Like a
And
house
those
usually, but we can't accommodate for the portfolios. So
yeah, yeah. Unfortunately you can't just spend a crore right off the bat.
a crore
But
in
there
Palghar.
yeah. Even Chembur is expensive now.
ओपन बाग का तो कोड 001 है bro. So open bag
Yeah.
is I
Oof.
saw the other day. It's center of city. He lives in prime location.
Yeah.
Yeah, yeah. True.
That's why we can hear the birds chirping and everything. Itna,
Yeah, no.
yeah, shant.
In your face the words are. What do you in your ear?
Bro,
Yeah, but
sometimes
hmm.
what has happened is the birds come over here, and they start chirping. So I have literally thrown my charger, my wire, and one morning I didn't have enough things to throw because they were coming and eating something over here, Nietzsche. I don't know who put it over there. But I was throwing like I used to throw my chappal or something on the window to like scare them off.
That's what luxury real estate looks like, ladies and gentlemen. Throwing chappals at the birds that come to your window.
It's so pissing off, bro. So pissing off. And then my mom
There
starts
are
shouting at me.
cons to being in prime real estate areas.
Bro, but it's good. There's no hours, nothing. Very calm. See, na, now so
Except for
sharp.
the birds, of course.
Except for the birds, people shouting in the building, those children shouting, then trains passing by. Ghanta
Trains,
quiet.
yeah.
It is.
Arey, bro, Sagar, that
At least you
train.
don't
Idhar
hear,
aati.
but he meant you can hear all that, but at least you can't hear the poor people.
Yeah, that's true.
You can't hear the poverty that's on the other side of town.
That's because I am the poverty. No, hey, bro, but
Yeah.
actually, that is good, bro. There's no traffic. That pee popper is not there.
Yeah, but like, I mean, taking like actual merit into what you're saying, people have taken those things into consideration and been like, we want to spend a premium on that to ensure that our surroundings look nice. There's not a lot of sound. We get, I mean, it's not worth your money, but like you spend a lot of money, and luxury housing is really taken off. where I think
Bro,
the last year I've seen a 97, 98% increase in the number of luxury homes sold, and this is like the highest year or best year that we've seen in the past decade, at least, for luxury homes in India. Rental incomes have increased; they've gone back to how much they used to grow prior to COVID, and then that will continue to also increase as luxury homes become more of a thing. So real estate looks good, which is something that I'm fearful of seeing, of course, because anything can happen at any
Like,
point.
look at it this way, right? Like, even in a rising rate scenario,
Yeah,
the amount of real estate bought in India did not get affected.
अरे
Um,
bro, that is also because people have this notion ना कि मतलब पैसा गया नहीं है किधर. वो तुमको रेंटल यील्ड भले तुम लोगों को 5% ही मिल रहा है उसके ऊपर 5-6%. But then the thing is कि हाँ, we can see our money somewhere. So India has this one thing कि if you can see your money somewhere, that means it's safe. Gold, real estate, ऐसा. Like
yeah.
yesterday only, I was talking to a person, like a friend of mine, and he was telling me, "Hey, bro, real estate is the best investment." And I'm like, "Hey, bro, how is that possible? Out of 6 stocks in my portfolio, two have given me 40% return in the past 1 month."
Yeah. Or flexing that insane portfolios means. What about the other ones, bro? What are they at?
They are at an average of 8% or 9%. Not
selective,
bad. Not
Yeah,
bad.
yeah,
selective
still up
data
only.
processing.
Bias. But actually, bro, overall also Chell portfolio is up 15%.
Yeah.
What do you real estate? How long it'll take, bro, for 15% for you to
No, yeah.
get
I mean,
15%?
Actually, it depends. No? It depends on where you bought the property, where your land parcel is, where
Huh,
what.
that is there.
So it all
I mean, now
depends
if
on
you
that. Like, if you average it out, not everyone's going to be lucky. You probably hear about the luck stories, but you don't probably hear about. No one comes and flexes and says, "Ki, "Arey, mera real estate to same bhav pe aaya." No
hmm.
one's going to flex on that. Right? People are always going to flex that. "Eh, मैंने तो 10 लाख में खरीदा था, अभी तो 1 करोड़ का भाव हो गया," and all that jazz. But like,
this,
yeah, like selective, right? I mean, good example.
Yeah.
so that is the story with this area now.
Oh,
Yeah, but
okay.
when was it
Yeah,
10
of
lakhs?
course.
10 years ago?
No, more than that. By
More than that, or less than that?
2004.
So 20 years ago is a huge time span to see a 10x capital appreciation.
That's
Yeah,
true.
but equities में भी तो average 12-14 पकड़ेगा तो उतना ही लगेगा time.
True, but then you have to shell out more, right? And people
See,
think that,
bro, तो मतलब we are just
More and not liquid, and it's immobile, and there is costs
yeah,
associated with it, and all of that.
yeah,
Yeah,
bro,
so
taxes too
very
much.
basic real estate investing. But yeah,
Chapar
what is
chapar
the view?
what
on
is
real
the?
estate.
What is the view
I
for 24?
I can give
Yeah,
my
yeah, that's
personal
what.
view.
You tell first.
Nice,
Oh,
nice.
not for 24. I want to give a long term view.
Tell nothing.
I want to say that the rally is not going to be as much as how it was earlier. Like in the past 10 years, how the real estate market has rallied, I don't feel that rally is going to come anytime soon again. Because I feel the real estate prices are very inflated right now. And yesterday only, I saw someone selling their own real estate to a friend of theirs. And I
What?
joined in the conversation and I was like, "Hey, भाई वो तो बेचेगा ही वो builder है." So you all have to think.
How does this conversation make
I
sense?
have no idea.
अरे but like अच्छा पकड़े कटा director editor
Sure. But we failed to
editing में
mention a very important aspect that although residential real estate might be too inflated in most cities, we are seeing a huge boom and a lot of money coming into office space.
so you think that
In
will
fact,
grow as much
y- yeah, 150%. Like not the percentage growth, the surety.
मैं फिर कुछ गलत बोल के आया कल
No. Because see, office spaces are really doing well. Over the past 10 years, all the global real estate investment that is coming into India, 65 to 70% of it has been allocated to office space. That's a huge chunk of that amount going into a place that A has higher rental yields, B will be used far more than a residential space would be, and C will always have constant occupancy rates crossing that 80-90% mark, whereas in residential we won't see that all the time. Plus, with co-working spaces becoming a huge thing now, or as they like to call it, flex workspaces, that whole market is going to become more of a thing than we've seen earlier, where now flex market space in terms of just square feet for square footage in the country makes up for about 20 to 25%. That will become 50% in the next 5 years or so, which has more of a rental yield. So investing into those kind of properties might just be the next big real estate play, or at least a spot where uh, it isn't as inflated as maybe the residential market. And therein comes the catch of how to invest in a place like that without having to shell out crores and crores into actually buying and maintaining these kind of properties. And that's the instrument called a REIT, or an
REIT.
REIT. Yeah, real estate investment trust. So these are companies that buy these properties on your behalf and manage them, and basically give you a cut of the rental income that they make off of these properties. There's about four or five of them in India that are listed on the markets, and there's a lot of regulations coming in to make these more attractive, whether that is giving REITs mutual fund access or creating a REITs association in India for the first time ever. That happened a month or two ago. Plus, a lot of these companies now getting into buying and acquiring more property, making their investments look far more attractive. Whereas we have one, which is the Embassy REIT, which is the most largest one in Asia. Are you laughing, bro? You have something to say about REITs or what?
Sagar knows what why I'm laughing. Okay.
Wow, thanks.
Nicely, I was ऐसा listening and भेजो पीछे से that train is good.
Oh, of course.
Yeah, I couldn't hear
It's
it. That's why I figure it's.
Because you
see,
muted.
bro. No. I
Oh, I thought you
muted
muted yourself.
after they started.
Arre, that train didn't honk, na. Usually in the morning, that
It
train.
honked. That's why I know. That's why I started.
Oh,
That's what, bro. With luxury property, you get good windows also.
Infrastructure.
It's not
But yeah.
luxury, but okay.
Yeah, so basically investing into REITs and choosing the right ones will possibly add some kind of value to your portfolio for sure.
And if you can't buy real estate and you're poor, so that's a good way of getting
I
benefits
mean,
of
this.
real estate.
I mean, most people can't just buy properties like that. It's
So
a good
that's
way
a
to gain
by taking liabilities or by extremely like
yeah,
skewing their portfolio towards real estate, or just
yeah. That's,
using real estate as consumption rather than as an investment.
yeah,
but they don't consider real estate as a part of their portfolio. Like what I've seen, most of the Indians, at least now they've started. But if you see 10 years ago, they never consider real estate as a part
Yeah,
of their
so they'll always be
portfolio.
like real estate here, and then this is my portfolio.
हाँ,
They just
portfolio
charge
मतलब उन लोगों को
real estate is
हाँ,
like the special pocket which is there, and then this is my portfolio. I'm like, bro,
but that is also
that's
कि
their
मतलब
backup plan. Yeah,
कुछ भी हो गया तो एक मकान तो है bro, like
yeah.
it's like
But
that.
that sentiments, I mean, I think it's changing, right? Like people aren't
अरे
just
तो
buying
रेंट भी तो
houses.
मिलता है मकान, उसमें क्या है?
क्या क्या
रेंट मतलब छत होना चाहिए मतलब क्या? रेंट पे तो मिलेगा, मतलब I don't understand
अरे
the
तो
logic.
लुट गया आदमी तो लुट गया
Unless you're Arnav Jain, then it's only 2K makan.
लूट गया.
टूटे मकान
But yeah,
टूटे मकान, that's not called टूटे मकान, no? That's called
it's
something.
called Gul. I despise that man, but okay.
Because I was
Why?
I don't like his music. Arnav Jain.
Bro, you aren't getting any chicks now then, bro.
yeah,
It's okay, bro. It's okay.
he's
Bro.
getting all the chicks, bro. He's getting people's chicks also. He's getting everyone's chicks.
Let him. Getting matlab kya? You should be like Babul Khan. Nice
Getting
guy.
was, but
I've
he's also
seen, bro, supersonic people are dying, bro. They're with their boyfriends and they're dying over him. Oh, Anoop, I love you.
But he
When
sounds
he was,
so bad live. His recorded music फिर भी चलो ठीक है, it sounds
I
good.
was so, I was
Live he
so
sounds
drunk,
so
bro, I don't care.
terrible.
I was only singing better than him, I think.
That's a stretch,
That
but okay.
yeah.
I was I'm drunk, bro. I was listening.
Not everyone thinks they sing sound well when they're in
No. I
concert.
thought honestly say I don't sound. That's the truth. You should
Yes,
humble yourself, bro.
true. Yeah.
But yeah,
So
coming back
that's
to
about
REITs,
real estate.
REITs.
So
What
REITs
other
or
app?
investments? What's the pick for 2024?
REITs
What's
or
your pick for 2024?
Me, I
REITs
think
or investments?
invits. I think invits.
So why did we spend so much time on REITs? Time
No,
before
these.
time
Yeah,
between.
of course. It is a
REIT,
good
REIT, REIT.
segue to get into. No, no. Like it's not. I would have one of each, and I know what I want, but I would skew it to invits more because they look a little more
Okay,
attractive right now.
now in 5 minutes you have to
So
tell why. Yeah?
Okay, first, what are InvITs? They're similar to REITs, where instead of investing in property, they invest in infrastructure products like roads, highways, metro, or now most recently becoming the trend is power related. So your transmission lines, solar power, wind power plants, all of that is gaining real traction, and InvITs are coming into the market. I mean, entering the market in the next year also, which will have access to you getting a share of the revenue that they make off of these power plants. Plus, among the ones that are listed, which are just three, there's one specific one, which obviously I won't name it, but like they're really acquiring more uh, power plants or power related projects under their purview. Their yields are at least double of what REITs give you in general. So a good InvIT will then give you far more than what you would expect. So it will give you as much as maybe a stock or an index fund would in a given year, just out of the distribution income that these things give. And there's also the capital appreciation. So it's a two-sided like win-win situation if the InvIT works out for you. So because renewable energy is becoming such a thing, and because there's that whole doubling of renewable capacity happening over the next few years, choosing an InvIT over a REIT seems more prudent. There, I did it in 2 minutes. Yeah. So yeah,
Not your first time. You look like you're experienced.
because I'm not an Anuj Jain fan, bro.
Hit and run. You are a
Hit
Bhaijan
and
fan.
run. Yeah. So that's the 2024 outlook on a bunch of asset classes.
Wow.
So
Wow.
coming to the key, not the key, one of the important and last parts of probably this discussion: how would you build a portfolio using this information, right?
Yeah.
And the way at least we at Repeating look at it is that sorry,
Can I
Slap
tell you
algorithms
how?
guy.
no.
Tell. Now do you have to no.
That's okay. I'll tell
Interruption
later.
to a husband, huh?
I'll tell later. Yeah. How will we build? Sagar.
Yeah, so you build for retail investors, primarily first taking into consideration what your risk profile is, what your risk taking ability and willingness are, combining those factors along with your financial goals and your financial situation, and coming up with a basic framework for investing, which can be conservative. So you have about 20 to 30% or 10 to 30% in risk free or less risky assets, and sorry, in risky assets, and 70 to
The
90%
rest
in
of it.
debt or gold or relatively safer assets. Um, if you're balanced 40/60 on both sides, and if you're aggressive, pivot the or flip the equation around. Um, so that gives you a framework of how your asset class distribution should be across less risky and high risk. And of course, that 10 to 30, when I say, or 40 to 60, that gives you the maneuverability to um, sort of choose your allocation depending on maybe your sector view or maybe your advisor's sector view or asset class view, not sector view, and
Yeah.
probably make the most out of how much room is available for you to move around. So one is, we'd not recommend 30% gold, 20% equity. That's not how it works. For a retail investor, ideally it should be basis personalized conditions, whether you want to be placed in an aggressive, balanced, or conservative portfolio. But within those bounds, how I would place myself is that, irrespective of the bound, I would sort of maybe place a high amount of exposure to equities, given the fact that we're at no structural sort of upward trend. So I would not want to call out key. पिछले साल 25% है, ये साल 14% आएगा, तो I will reduce my exposure to equities. If you're on a, you have to keep your sight on the longer term, and if the longer term is positive and there is an India story playing out, there is no point going against the tide and trying to play a, because there will be lesser positive, I will allocate lesser, etc. I would still go full throttle on equities for the next many years, at least in India, given the fact that there is so much visibility around stuff happening.
Yeah.
So that's one. Just plainly because I don't want to like time the market on a yearly basis. Second, I think on debt, I would press harder, given the fact that there is visibility of interest rates peaking out and equity appearing expensive. So I would, although not compromise on that equity exposure, debt I would sort of be opportunistic about in terms of picking up longer term bonds and locking in high interest rates. If someone's offering me an 8% FD and I know that interest rates are going to reduce in the future, I'll pick up that 8% FD.
Yeah.
Why not? But yeah, that's the broad thought process. So,
Great.
and of course, adding some gold for safety, adding real estate for the kind of appreciation it gives, especially instruments like REITs and InvITs, which give you a yield, not just capital appreciation.
Yeah.
Additionally, probably taking some exposure to international equities because you want to play on the ever-growing US story, or pick up something like China and be opportunistic, or take a bet with some allocation of your money. So well diversified across asset classes, but focusing on the main things, I think equities continue being positive because of the long-term, debt press harder because of the current situation. That's my view for 2024. What are your picks for 2024? Laksh had an answer to give.
Like listening to this, I got a lot of insights and everything. And I think now I know where I'm going to park my money for 24. You all want to guess?
Gambling.
What?
Poker's where is park.
Poker.
Fixed
Yeah.
deposits.
पोकर का किटी बढ़ रहा है लक्ष्य का इसकी वजह से व्यू जो भी हो.
I swear, bro. I'm big on gambling this season. You know what I mean. Hey, Mate. तो एक और government will bring one more law against that. Company डूब जाएगा. With its assets only. No. Whatever, bro. Like, I am though focused right now on equities. And gold now. Ayush didn't give me a chance to buy. So, whenever the next
I
bond
wish didn't
opens.
give you.
ऐसा unit plus क्या करो buy gold sovereign bond.
We did discuss it. If you all don't read the terms and conditions, it's not my problem.
Wow.
But yeah.
Every
let's see.
investment advisor or financial intermediary.
Yeah, exactly. But yeah.
Ayush, where are
But
you
this is
parking
reverse,
your
right? It's not like it was a problem. Like problem is you all didn't get it, not that it you all got it and it went bad. That's usually the case with
No, we didn't even
advice.
get it. It's like we didn't do the right thing.
So might as well. So if you do intend to invest in an SGB, dear viewer, please keep that much funds available in your demat. Otherwise, you will not get issued the SGB.
Otherwise, moe will happen.
Moi will happen.
Because in IPOs, you create a mandate on UPI. However, in SGBs, you've got to physically take the effort and park that money into your account. And if you fail to do that, then
you don't get
moe.
But this
Hey,
time
bro,
issue
we'll
was
make-
barely $6,000 as the minimum, so that's okay.
We'll make now
Whereas with
this
SIP,
reel
IPO
with
still
Sagar.
larger. What Moi
What's up?
reel.
Moe.
Hopefully, Sagar will never have to make a Moi reel because that means something seriously going wrong.
No,
Wait,
why?
Lina, I didn't get SGB allotment. What more can happen?
Yeah. So see now, Sagar's biggest issue in life is that he didn't get that
You
SGB.
get the SGB allotment. Yeah.
Man is ruling on another level.
Tata Tech nahi mila, SGB nahi aaya.
That
Tata
too
Tech
was
at least
not.
agreed to universe for it. SGV तो मेरा ही
Yeah.
गलती था. So,
अरे you've seen that 1-2 reels about कि अरे सूरत में ऑपरेटर्स है ना वो जो बोलते हैं कि आज 5% ऊपर तो गाड़ी सामने खड़ा हुआ मर्सिडीज तेरा. Sagar is the guy he's talking about.
and FYI, I stay in Vadodara these days, not Surat.
Yeah.
Hmm.
But I just had to correct him because like he keeps saying Surat to everybody.
Oh yeah, fuck. अरे but ठीक है यार अभी कौन मिलने आने वाला है सूरत में भी वैसे. Oh, what you will talk upon? मतलब meeting you do ना upon drinks and everything.
Ayush
तो उधर
came
drinks ही
to
नहीं.
Vadodara. He didn't go to Surat. He came
Ayush,
to Vadodara to meet.
he was forced.
No, no.
Yeah, he was kind of like arm twisted
I
to do
was
that.
nudged. I was
Exactly.
nudged.
Exactly.
I
ऐसा
think
if you
that's a
tell me
better
कि अरे
phrase.
Laksh चल let's go to meet Sagar in Vadodara, I'll be like hey, ये मतलब दारू लेके जा सकते तो लेके जाएंगे इधर से.
नहीं लेके जा सकते ना.
तो फिर यहाँ मोए मोए.
Okay, the podcast is over. Bye bye.
Yes.
Yes. Okay. Thank you so much for watching. Please stay tuned for the next
Fuck.
one, and that'll be the last one for the year. And that's a wrap. Merry Christmas. Bye bye.